Hello, how do I identify entry and exit points without using technical indicator? We have few stocks that we can analyze together, and we are going to analyze those three. The first one is APH, and I will, I will we are going to use a maximum daily chart, and I will say that APH, beside the chart, I do not use any technical indicator. So we are just going to use the chart. And APH, to determine my entries and my exit point, my entry point by default is the valley line. Using is based on the strategy I'm using. I will determine the entry and the exit point because we are using long option and swing trading strategy, and we are trading upward large cap stocks. They reach all-time high frequently. Therefore, I use the new high as my exit point by default. Does not necessarily mean that I will exit the trade right after it reached the new high. I have done that, but now I'm trying to see if I can stay in the trade longer, assuming it's going to reach new highs few more times before getting ready to pull back again. So our exit point is the new high. You might call it a resistance line. I like to call it the new high or the peak of the mountain, because when the price is swinging around, it's creating mountain, a chain of mountain, with the peak being the top of the mountain and the bottom of the mountain being the valley. So I like to use that terminology to make it easier for us to understand it. So my entry point by default is the valley line. So it can be challenging to differentiate the valley line from the support line supporting the upside wall of the mountain for some stuff that have a growth in them and have been growing sharply for a certain number of years. You just don't know if the support line supporting the upside wall of the mountain is the new valley line, or if that is supporting the upside wall of the mountain. Because again, when you have a mountain, you have the wall supporting the upside wall, the upside of the mountain. Then you have a wall supporting the drop side of the mountain. So, and then you have the valley. So when we are looking at APH, we have two lines that we color in purple, and the bottom one, it is the valley line. It has not touch point with it. You have the date on the x-axis from the past to the present, and the price from 0 up on the y-axis. So we have 2 years that it has not touched base with this valley line, and then we have this one. So we don't know if this is going to be the new valley line. So we color code both to be where we will buy it. We traded in 2024 using short uptrend swing trading strategy and trading it around this short uptrend line, buying it there and selling it there. We bought it here, we sold it there, because when we bought it, it pulled back on us and we stayed in the trade until we sold it there. We bought it here and we sold it somewhere there as well. So the arrows facing up shows where we purchased, the arrows facing down shows where we sold. In 2025, we have not purchased it yet. This one pulled back below this support line and then start going up from there, and we didn't purchase it. So we are waiting for that to pull back to either this line or this line for us to buy. Therefore, we have not purchased any in 2025, but we traded in 2024. And today is November 3rd, 2025. We are analyzing before the market open. So Friday, the price dropped. That's why the price is in red here. That will have a red bar on a candlestick bar on the chart, meaning the price at the end of the day was higher than the price in the morning when the price at the end of the day was lower than the price in the morning when the market opened. The price dropped. But regardless, the price, by looking at the direction of the chart, the price is going up. So the chart is going up. It's nowhere near where we want to buy. So that is how we determine our entry point and our exit point without using technical indicator beside the chart. Who is there? Yes, that's fine. Do not open the door. So the next one we are going to analyze is ATA. ATO. So ATO, we have our value line we like to buy at, and at this point the price is higher up, nowhere near where we want to buy. It's closer to the new high. It's going down. Friday the price dropped, but it's nowhere near where we want to buy. Again, it's not a buy today either. The one more we are going to analyze is AZO. AZO. So AZO is going down. So this is an example of you wondering, is this the valley line, or is it a support line supporting the upside wall of the mountain? Because for the time frame showing up on our screen, 1 year, 2 years, 2 years, 3 years, 4 years, 5 years, the dotted lines are the limit, the year. It has been constantly using this support line to rest on and go back up, and it's not going higher, too high past the, it's not too higher up away from that support line, if that makes sense. The claiming is not going too higher up away from this support line. So I don't know if it's going to come back to this line or not. I'm thinking that this stock could be an example of a stock that you might purchase for investment purposes for a few years. And the reason why I'm saying that is, I don't know, I like to say that you can combine day trading, swing trading to your investment strategy to become a very good investor when it comes to stocks you are investing in the sense that, well, investing is like buying a stocks to hold on to it for a certain number of time and sell it. How long you are holding on to it does not really matter to me, but swing trading allows you to lock in the growth away from the valley lines, while day trading skills allows you on the day you are going to buy the stocks and on the day you are going to sell the stocks to buy at the best price, meaning at the lowest price you are comfortable buying or you like to buy at, and the day you will sell it to sell it at the best price, meaning at the highest price that you want to sell it at. So I think each one of those type of strategy, you can pull strategy from them to be a good investor, to your stocks. When it comes to the stocks you are going to invest in and how long you want to hold on to them. So because when you, in my opinion, when you are investing long term, your money and you just buy the stock and keep it in your portfolio, your money is going to grow steadily along the valley line. So if you assume this is the valley line, let's assume this is the valley line, that at some point it's going to pull back to this line and go back up. So your money is going to be growing steadily along this line. You're still going to make money because that line is tilted up. The price you pay for it here, you see the corresponding price is going to be different from the price here if you end up selling it somewhere here. So your money is going to be growing steadily along the valley line. Swing trading allows you to lock in those growth away from the valley line by selling it after it climbed the mountain for a certain period of time to lock in the growth, the growth away from the valley line in, and then when they come back to the valley line and start going up to buy it again. And yes, you are going to pay a higher price that time, but you are locking in the growth away from the valley line. And there are some stocks, so if we assume this is a valley line, it's not going to come back to this valley line, then the growth here that you are trying to lock in is just not substantial. Does that make sense? For you to be, buying it, selling it here, and buy it here and sell it here type of things, it's now going too far away from this support line for you to be trying to lock in that growth if you are using long option and swing trading strategy. And that makes me think maybe this is just the support line for the upside wall of the mountain, and this could be the valley, because this is just two, it's not a huge distance between the two, but here it is though. So that makes me think again that maybe this might be a good stocks to invest in if this is the valley line, and now bother selling it to rebuying it, because it's not just going too far away from it. So that's something that we might keep in the back of our mind when we run into some stocks. Depending on how they looks like, we might just decide to just buy it and hold on to it and see what it's doing, if it's having this sharp growth. If we go to maximum monthly chart, you can see, even more years in front of you, this growth is just too sharp for me to think it's just going to continue that way. So I have a feeling like at some point it's going to come down here. When, I don't know. If I buy it at this valley line and it come back down here, I will be trapped in it for a while before I will sell it. But at this point it's going down, so I will see if it's going to rest here and start going up or not. But it has been on this rise for 1, 2, 3, 4, 5 years now. So it detached itself from this valley line that for 5 years now. It has not gone back to it. So, and that's what I'm talking about, that if you buy around an area like this and it's been following this valley line, but the thing is you are not going to know for how long it's going to be doing that for you to decide that, well, it's good to lock in this growth before it start going down. Does that make sense? You have to have multiple of you that pattern on the chart to be able to deduct that, oh, that is a common thing for these stocks to grow for 5-6 years before pulling back down and repeat the process again. So without that in mind, you just have to try it. If you get stuck in it, well, you get stuck in it, for the time it's going to take before. So for that reason, if it start going up from here, who knows, I might buy a share and see if that'll be a good purchase or if it's decided to come down here. So we will see. But I traded it before in 2024 successfully, up, in and out so often, and trying to trade it using long option and swing trading strategy, I'm a little bit hesitant getting in just because I just don't know if this is a valid line or if that's just the mountain just look more, because I have seen that with other stocks that at some point decided to go all the way down, and by seeing those from other stocks make me think this could be a case for this. At some point it might pull back. This could be the valid line, but when it's going to pull back, I'm not entirely sure. And when you are not sure, if you buy at this valid line and it go up and reach a higher peak, it's worth it just selling it and get back out of it. And when it come back to it again and start going up, try it again. Just keep in mind that if this is still a mountain that is claiming, at some point it's going to be down claiming that mountain, and will decide to come back down to end that cycle before starting a new one. So that is how I try to swing trade, determine my entry point and my exit point without using technical indicator other than the chart. And the chart is candlestick charts, and every single candlestick is a day time frame that's is on the chart. We use maximum daily chart for it. So thank you so much for watching our videos. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasop.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and slowly grow your account from there. Thank you for your time. For more of our swing trading tips, will you please check the playlist in the description of this video. Thank you.